Okay, great. Let me just all start by welcoming all of you to Hong Kong for the LME Week Asia. This is the third time we have organized this great event in Hong Kong, and this is the third year the Hong Kong Exchange has operated LME as a fully owned subsidiary. And we have made a lot of progress, and we have come a long way. So today, I wanted to quickly recap where we come from, what we have done, and what is going on today in Hong Kong, and what's the implication going forward for all of us in the commodity space. As you all know, that when we take over LME back in 2012, we have three key missions: buy it, fix it and build, number one. Number two, make it extend into Asia. Number three, connect it to China. And we bought it, we fixed it, we built LME Clear, and we built LME IT, and we built everything and made investments that make it a truly global competitive commercial platform. So that first job is done, checked. The second job, extending that to Asia, we have made a lot of progress. And the two companies are operating essentially as one integrated group with substantial amount of exchanges, substantial amount of efforts working together. We're making LME a lot more friendly to our Asian clients, particularly from China. We have extended membership to our Asian clients, particularly China, and we have made it easier for our clients to trade. We continue to work on that going forward. And we have also made LME product actually physically root over here, called the mini. It's the mini contract today, a little bit mini. It's small, but it's the beginning. It's the beginning of a long journey. We're not worried about, we are doing this not because we wanted to have tens of thousands of contracts on day one. That would be nice. But we all know things take time. The most important thing is to keep the flame, because that flame, with proper care and proper promotion, with all the changes in the background in the ecosystem, will become a significant future trend for all of us. So the LME piece is working very, very successfully. And LME used to be, we obviously paid LME, on a commercial basis, even though by the time we bought LME was essentially not a real commercial entity, and it was not operated as a commercial entity. Today, it is operating fully as a commercial entity. It became a very important contributor to our revenue and our profit, and as we announced the first quarter. Now LME already contributes 23%, to our first quarter earnings vis-a-vis the last quarter, the quarter of last year. Obviously, I think with the base of Hong Kong continue to grow, and I think even though LME will continue to grow, I think we're going to see the two companies, both here and there, continue to grow. LME is going to be greatly important, but I think overall strategically, LME is going to deliver a lot more than whatever financial contribution they may or may not be able to contribute over the future quarters and years to come. So today, I think many of you, I have spent a lot of time, with the receptions with you. A lot of people come to see us. We very much appreciate the time you're making to see us. And, it's always a great pleasure to see our friends in LME Week, both here, Asia, and also in London. And I heard a lot of excitement, and also heard a lot of anxiety. The excitement clearly is that the market has been very strong in Hong Kong, the equity market. A lot of the Hong Kong-based futures brokers are actually very busy trading stocks. And many of you are having trouble sometimes getting, traders to say, you're supposed to trade metals, but why are you focusing on stocks? Many of you probably bought some stocks personally, so your interest sometimes during the day, looking at the index and feeling great, and then, order some nice wines and the lunch because you think you are $50,000 rich in that afternoon. But I think, the equity market here in particular seems to be in red hot summer sun. Everybody's happy, great party, massive volume, seems to be really, really, bullish. But on the other hand, the commodity side, many of us are still feeling that we are still just barely coming out of the winter. I think it is spring, but it's still cold, the wind is still blowing, and we still yet to see how the sun is going to come out and how the warm summer, beautiful summer is going to come about. So I wanted to quickly go back and look at what we have done in equity and what we have succeeded in building the Stock Connect program that is the catalyst for a substantial change in our overall marketplace. And I want to look at that experience quickly and see whether or not any of that experience has any implications to what we will be doing in the commodity space, and whether or not there's things that we can learn, there are things we want to avoid, there are things that let us know how the evolution is likely going to take shape in the commodity space. And also, hopefully, in some concrete terms, and talk about what we might be thinking of doing in the coming months and years. In the equity, many of you know Stock Connect, but not all of you necessarily know how it works. Knowing how it works is actually very important to know why it succeeded. I think the Stock Connect program, in its first glance, everybody thought, okay, just international investors are able to go to China to invest, and domestic investors are able to come through the Connect to invest in Hong Kong. Yes, that is actually the case. However, that actually is long from the case. The real issue here in the Stock Connect is that the trading, because the two markets are so fundamentally different, that the investor are no way are able to move money into China to invest in China, or Chinese investors moving money out of China to invest here on a large scale. So what we have done, the Connect program essentially is use the clearing houses, exchanges, and regulators to absorb and translate and convert the differences of the two markets and make it work so that investors are largely trading on their own market norms and with the market rules. So this is how it works. All the trading is actually happening virtually, electronically. All the international orders are routed into Hong Kong Stock Exchange through the local Hong Kong brokers into Shanghai in one matching engine in Shanghai. So Mrs. Wang in Changsha is matched with Adam Smith from Yorktown, New York City. And also on the other side, all the Chinese investors investing in Hong Kong are ordered electronically through the Shanghai Exchange and domestic brokers coming to Hong Kong, and then one matching engine. No money changes hands. It's just electronic trading. Every day, at the end of the day, everybody settle and clear with their home CCP, meaning the international investors are settling in Hong Kong as if it's a Hong Kong stock, and the Chinese investors settling with China Clear inside China. The buy and sell are netted out, and then Hong Kong Clear is the only international player every single day walking across the border and settle with China Clear, and they are the only Chinese investors settled with us. So even though there's a massive amount of trading every day, there are only two payments that happens between China and international. That allows all the funds to be trapped, monitored, not trapped, but just be kept and managed within your own custody and your own clearing system. That model of trading has never ever been tried anywhere in the world today. But the beauty of that trading is that you are able to trade on your own terms, and then let the exchanges and the clearing houses to work out the differences of the market, make the round pipe connected to the square pipe, make 220 volts into 110 volts, so the investors don't actually feel they're trading a very different market. Obviously, there are certain differences of the two market structures that cannot be translated, that has to be carried out to the designation market, but that's very, very few. 90% of the rules are already being absorbed. And the implication of this is tremendous, because this whole trading regime is under the joint regulatory oversight of the CSRC and the SFC. Obviously not directly overseeing everything, but it's really a collaborative mutual enforcement assistance program that they are able to work together. And also the exchanges are completely sharing the economics. So all the interests are completely aligned. We don't care whether more people trade in Shanghai or not, because I take 50% of what is being charged by Shanghai Exchange. And they don't care how much is traded down in Hong Kong, because they will get 50%. So mutual, reciprocal, interest alignment is also very, very important. And this model really gives us the inspiration that China can open on a very massive scale without fundamentally having to change its current legal systems and regulatory systems and trading systems. And that the international community do not have to forego your way of life in order to deal with the Chinese investor community. We will be the one in the middle to make it work for you. So that allows the Chinese to consider their internationalization in a very different light. So today, essentially, we have created a common market, a mutual market between China and Hong Kong. And inside that mutual market, the two regulators are checking the traffic on each side and trusting the other side will check the traffic similarly. The exchanges are putting all the orders into this virtual common market. The settlement and clearing houses are basically taking care of money, so no money gets brought into the common market on individual basis. Everybody simply trades. So today, inside that market, we have a shelf called Hong Kong shares for Chinese investors. We have a shelf called Shanghai shares that is traded by the international investors. In a few weeks, hopefully in a few months, we will put a Shenzhen shelf for international investors to trade. Hopefully we will put an equity derivative shelf for international investors to hedge. And also we can put an international index futures shelf for Chinese investors to hedge their exposure into the cash market outside China. And in a few, maybe in a year, maybe in 2 years, maybe in 3 years, we're going to put FIC derivatives in that common market. We're going to put international equity into that market. So essentially, think about it. If China's internationalization today can happen in a way where Chinese investors sitting at their home, calling their brokers, going through the exchange, going through their settlement clearinghouse, overseen by the CSRC, they simply just need to do that. And we simply need to bring international to that common market. And conversely, the Chinese can put their product in the common market so that international investors and traders and members like yourself are able to come into that common market on your own terms, with your own capital. Don't have to go across the border and to set up a new account and develop a new clearing relationships. If we are able to create this common market for people to trade, that's really the full implication of the Shanghai-Hong Kong Connect. It's not about just a couple of transactional trading links. It is about setting up an ecosystem whereby all sorts of products, and many of them in RMB, are able to be traded. So what does that mean for our commodity space? We obviously, 3 years ago, when we talk about market mutual access, when we talk about the preliminary conceptualization of the Stock Connect, there was a lot of skepticism because people don't know what we were talking about. And there are a lot of challenges. We have to really work the regulators, the policymakers, the broker-dealers, the members, the investors to make it happen. Today in commodities, we are in that early stage of Stock Connect. We're probably not at the beginning of the Stock Connect, but we probably at the first 20, 30, 40% of Stock Connect. And we're making good progress. And I think the speed that a similar replicate of Connect is going to work in commodities is probably a lot shorter than what it took us to do a Stock Connect. But obviously before it happens, it's very hard to articulate in full the greater details because they're still being worked out. They're still being ironed out. But I just want to quickly let you know how we are looking at China's commodity market and how that works with internationally and in what ways they're different. I'm using this with a lot of regulators and policymakers in China. This is the international commodity market. It started with the bottom is the cash spot market. That's the real economy. That's producers meeting consumers and traders and everybody else needing metals and producing metals and consuming metals. And then you have the banks, and you have the trade organizations, and you have the warehouses and logistic providers providing essential services to that spot trading and making that spot trading safe and sound and credit worthy. And then on top of that, you develop benchmarks, you develop a price discovery, and then you develop the futures market. So as a result, the number of trading as a percentage of overall open interest is really a normal pyramid, as we can see here today. But this obviously takes about 100 or 150 years to develop the spot market, the actual real economy, and gradually become a futures market. China started with a very different route. Obviously, China only literally opened itself about 20, 30 years ago, and is becoming a huge importer of base metals. So the base metal business of China is the most internationalized because they have to buy from internationally. So they have to buy from internationally at the bottom. But so the spot market today is still very undeveloped, not part of the futures industry, not regulated by the CSRC. The government obviously have to design a futures market, have to develop a future market. The easiest thing to do, the faster thing to do is to start from the top. So there's a very big futures market in China today. We all know, the Shanghai Futures Exchange trading volume is probably the highest, among the global peers. In Dalian, we have a great friend from Dalian here, from here. They're global leaders in the product they trade in terms of trading volumes. But on the other hand, the real economy, where China is the biggest importer of many of the base metals, they're not yet able to completely, fully hedge inside the domestic market because that domestic market is not rooted yet in sufficient amount of the real economy in China, simply because of not because of they have bad policies and they're poorly managing. In fact, they have been managing this the smartest possible way they can. It just takes time for that pyramid to come down. So we do see the real economy of China, the Ming metals, the Jiangxi coppers, all of them are buying from international spot market, but not able to fully hedge yet, or at least many of the consumers in China, the traders in China, are not able to change. So therefore, the future, what we want to offer China as a proposition is that we, as a London Metal Exchange, under Hong Kong Exchange, we already develop a strong, credible spot market with a tremendous amount of services industry, great credibility in the logistics and warehouses, and we can help and we can work together, and that will make us a big winner together. Obviously, there are concerns that if I were running a domestic exchange, I will concern that if this collaboration took place, what does that do to our domestic impact, domestic volume? And is it going to cannibalize? Those are very legitimate questions. The lessons we learned in Shanghai Hong Kong Connect, Stock Connect, is that we have to align our interests. We're now discussing with our partners in China how to make sure we align that interest. I'm not interested in going blazing the gun to do something, because that gun is going to get jammed, and that gun could hit the innocent bystanders, and you're going to get hit. I don't want to get hit. I want to have the gun put down, and I want it to work together. I want to find a way to align our interests together, because fundamentally I see us being able to work together on that. So I'm hoping a little bit of dramatic impact. At some point, we're able to get them aligned. We're able to use our expertise, and they're going to be able to use the tremendous market forces that is already successful in China to make our future market to be able to do two things. I mean ours, China. Number one, fully service the real economy, the spot market, the guys who are really using metals or other commodities. Meanwhile, we are also make sure this market is international, because at the end of the day, Chinese consumers import the largest amount of metals and other commodities from the world, but they do not yet have the right level of pricing influence. On that issue, It's a big debate inside China as to how to achieve international pricing power. We are the biggest volume taker. We are also the price taker. How to eventually make us into an effective price maker. I don't think anybody have any issues for China to become a price maker, but we just want to make sure that price maker is happening in an environment that is fully international standards and with tremendous amount of credibility. So for Chinese colleagues, the question we have to consider is that when we achieve that pricing influence, do we have to do that only in China, or we can come out of China to do that? When we wanted to ask people to accept our standards, do we actually stay home and wait for people to come, or we can actually go out? 是非在中国做中国定价权，还是可以走出去影响世界定价权？是非要在家里迎战，还是可以在家里后战，还是应该出去迎战？ Those are the questions that we have to think, that how to develop the commodity market. In the end, as I talked about it, that in the common market concept, in the stock connect concept, if we are able to present a model where international investors truly can effectively invest in China without having to comply and change their way of life, if Chinese investors are able to sit in there to do that, we are the biggest winner. People ask me about the connect. What about if China one day completely opens up? Who is going to use your connect? I never understand that question, because the connect is not for the most sophisticated people. The connect obviously is for the sophisticated people, but not for the most sophisticated people. Basically, if you're smart enough, you're sophisticated enough, you have a lot of money, Chinese, let's say, you want to invest internationally, you don't trust anybody else, and you think you know you can handle, you already brought your money out of China, you're already investing in Hong Kong, already buying properties in London, you're already doing a lot of things. Conversely, the real smart money, the money sophisticated enough, are already in QFI in China. They're willing to pay the cost because they think there are a lot of value that they can see that nobody else can see. But for the most of us, for the most of the Chinese investors, you actually do not yet feel that you wanted to, or interested, or capable of directly go out there or come into China. But you wanted to sit home, but you still want to invest internationally. That's what you do with Stock Connect. And when you are done, when you become smarter and you don't really like it anymore, you want to play more aggressive games, you go and you leave. But then with every person leaving the program, there's going to be a 10 person coming in. We are talking about trillions of dollars of China's money that need to move. Just think about it. China has $30 trillion national wealth today, 20 trillion sitting in the banks, 5 trillion in fixed income, and only 7 trillion, 8 trillion, now it's approaching 10 trillion into the stock market. That's just not going to be sustainable. The US has a $40 trillion in fixed income, $25 trillion in equity, only $15 trillion in the banks, and that's pretty much everybody else like that. So today we are really facing with a China that is changing massively. China finally figured out this is the time to really change, and this is the time to make sure that renminbi become an international renminbi. SDR negotiation is going to generate potentially very significant result sometime this year or early next year. If that happens, renminbi will become almost a mandatorily, a reserve currency for many central banks and sovereign funds. And when that happens, China really have to massively change, and we see that trend today. Basically, we're going to see this is really the world's largest undeployed asset is sitting in the Chinese banks. The next decade is about money moving. We're going to see money moving from the banks to the capital market in China. That is happening right now under our eyes, and that's why we see the rally. But we need that money in the stock market to quickly go into the real economy, rather than just keep on circulating and then continue to beat up the price. We need the market cap of China's equity market not to increase by size because more people are trading and there's greater value. Rather, it's more companies that are able to access to the market. So money is going around the circle from the banks to capital market, hopefully to fixed income market, and hopefully ultimately back to that big circle. We're going to see money coming from China to international. We're going to see money, we're going to see capacity of China coming out. What is the AIIB going to do? Capacity have to go out. People have to go out. Standards have to go out. Pricing power have to go out. Interest rate have to go out. Exchange rate have to go out. We're going to see a very big change in China today. And whatever you are saying today, oh, why are you not, you talk about this, or you talk about that, but where's the concrete things? Don't look for that specific evidence. Look for the smell. Look for the trend. Feel it. It's coming. This is really, the biggest possibility that we are able to do. So coming back to ground, what are we going to do in LME? It's actually very simple. In our commodity, basically, product, liquidity, spot market. Our first thing to do is to hopefully bring international product to Chinese liquidity. Is it possible? Bring Chinese product to international liquidity. Is that possible? Make international liquidity meet Chinese liquidity. Is that possible? Make the spot market into the futures market. So on the first one, what we will do is hopefully cross-listing. Again, we will probably start with equity index futures. Please, stay tuned. Things will come. You will know about it. When that happens, you ask yourself, is it a possibility for us to replicate that in commodities? Liquidity Connect, that essentially in commodities, are we able to replicate a Stock Connect program? In spot and futures, we don't have warehouses. Everybody thinks warehouses are a very big issue for LME. Yes, it is a very big issue for LME. It is not a very big issue for Hong Kong Exchange. It is a very big issue for Hong Kong Exchange to make sure that in 5 years, we will have influence in the spot market in iron ore, coking coal, copper, and rubber, agriculture. We want to make sure that we are able to work together with our domestic peers to develop a great spot market and the services, the financing system, the credibility system, the settlement and clearing of warehouses and bill of ladings, all of this to make sure that domestic spot market in the real economy is becoming a true big foundation for futures industry, for derivative industry in Hong Kong Exchange. Obviously, LME is our biggest, most important driver of that, and ultimately, we are really looking at the overall transformation of China. In this big event, in this big trend, we all need to be ready. In equity, we spend a lot of time creating a lot of controversy to get ready. We have to make investment when people don't trust why we have to spend all this money. We're making people invest in Connect program. We change trading hours with a lot of protest. We have to do a lot of things, but when we were doing them, when we are asking you to do it, we were not able to fully articulate to you why you have to do it, because sometimes we're not at liberty of explaining everything. But trust me, everything we have done has a reason for it, and we need to be all ready when this big transformation takes place. Everybody here needs to ask yourself, are you ready? Thank you.